Hello, I'm Todd Pigott, managing member of the ZINC Income Fund, a debt fund organized right here in Central California for one of the longest running private fix and flip lenders in the state, almost 20 years. Our fund was constructed to provide debt for the loans for fix and flip operators right here throughout California and a few neighboring states. Today, I'm going to talk to you about California market trends and what investors need to know. The California real estate market is evolving, and as investors, understanding these shifts is absolutely crucial. At the ZINC Income Fund, we keep a close eye on key market indicators to help you and us make informed decisions on where we want to place our loan and our capital out into the market. Today, I'll walk you through the latest trends and what they mean for you as an investor in the ZINC Income Fund. Let's start with the big picture. Overall theme. Home sales in California have risen almost 20%. Actually 19.8% year over year, marking the first annual improvement in over 3 years. The median home price in California is now $861,000, a 5% increase year over year. These numbers show the resilient market that we live in, one of the largest economies in the world, and we rival most nations. Driven by both supply constraints and high demand, the shortage of housing is keeping prices elevated and keeping our loans extremely safe. One of the most notable trends is the sharp increase in sales volume. We're seeing the fastest year-over-year growth since mid-2021. This uptick is driven by buyers returning to the market after a period of hesitation. They're now normalized to this higher rate increase out there that we're seeing. After a period of hesitation, borrowers are starting to surface and get back to normalization and making offers on properties, encouraged by a stabilized interest rates and more predictable pricing of the housing market. Pricing trends indicate continued growth. While home prices have grown for 18 consecutive months, we're also seeing a narrowing gap, which is not surprising, between the list price and the final sales price. In California, with the exception of only 2 counties, maybe 3, every single county sold above listing price on average. This means sellers are adjusting to expectations, making the market more balanced for buyers and sellers. We're starting to see a little bit of constriction in there, and that's acceptable. I prefer to get the market back to a more balanced market of supply and demand on days on market. Currently, our days on market is averaging between 20 and 30. That is still unsustainably low. The definition of value is an able and willing seller and an able and willing buyer that meet to consummate the transaction in 60 to 90 days. So our average market, or days on market rather, below 30 is still unsustainably low. Prefer to get that back up into the 60 and 90. I would call that more of a normalized market. But here in California, constriction is so tight that that's keeping prices elevated and continuing to increase. I thought last year when we hit $750 on a median price here in California, I thought that was going to be the end. No, we're now at $861,000. Prices continue to climb. One of the key challenges remains exceptionally low inventory. The supply of unsold homes right now is at 2.7 months. We have less than 90 days supply for the demand that's out there. Slightly higher than last year, but still historically low. This limited inventory is keeping competition very high for product, particularly in sought-after regions like Southern California, San Diego, LA, and actually even the Bay Area. What this means for investors. First, real estate-backed investments, which is what we do, remain very strong, especially as a hedge against inflation. Because as those prices of housing continues to rise, that gives us protection from inflation on our loans. It's not going the other way. Second, the growth in home sales and price stability means there's still great opportunities in lending in this space, and that's exactly what we do and exactly where the ZINC Income Fund comes in. Our strategy focuses, number one, on protection of principal. No investor has ever lost a dime in our fund. Our strategy focuses on financing properties with strong upside, good marketability, good potential, helping investors generate consistent, secured returns within our fund. Are you looking to make the most of California's changing and evolving market while securing steady, high-yield returns and protection of principal? Let's chat and explore how the fund can offer you some key benefits. Protection of your investment, paramount. I'm invested in our fund. My family is invested in our fund. Protection of principal is our number one pillar. By having a first position secured lien on residential property, predominantly in California, I don't think it gets any better than that. Consistent cash flow. Every month, our distributions are wired or ACH'd directly to our investor accounts. Next, high yields. Our fund produces yields net to the investor of around 8 to 9%, fully secured by residential real estate. We are a fully audited fund, and all of your capital is secured with a first lien position loan on the underlying collateral. Reduced risk. I've done it all. Back in my 20s, I did beehives, I did energy stocks, oil wells, even stocks. I never did very well. 20 years ago, I entered real estate. It is the most exceptional reduced risk investment out there, coupled with return that I have found. Finally, potential tax advantages. Visit zincinvesting.com to learn more about the tax advantages. But we are a REIT. We are a mortgage fund with a REIT, and that enables us to enjoy some wonderful tax advantages that were enabled into law under President Trump back in 2017. Number one, there's a 20% deduction on all earnings generated from the fund. That's phenomenal. Number two, if you live in a state with preferred tax treatment, you are taxed in the state that you reside on, even though the income is actually earned here in California. Number three, your IRA is no longer subject to UBIT tax or tax return. These three tax advantages help make the ZINC Income Fund an excellent opportunity for those of you that want those tax advantages and want the protection of real estate, but don't want the day-to-day hassle of rentals. The ZINC Income Fund is probably a good place for you. Visit ZINC Income Fund to learn more about what we do and how we do it and how we help our investors grow their wealth. Or give us a call today, 888-623-2102.